Welcome back. Let's focus on earnings now. In United Breweries, Rishi Pardal, the MD, joining us to discuss those earnings first right here on ET Now. Thanks so much for joining us this morning, Rishi. So much to talk through with you on some of the factors at play this time around. Talk to us in terms of which markets you're seeing recovery. What were the key drivers for UB this time?
Thank you so much for inviting me. So as we have been saying, the COVID-induced or impacted year has really been all about how lockdowns have eased, how state governments have rolled back on taxes, and how the opening of one of our key channels, the restaurant and bars channel, has really emerged. Now, we've seen across quarters that these have been progressively improving, and we saw in Q4 specifically these gathering some momentum. And therefore, our business results really reflect a direct correlation with all of these. In addition to that, at the beginning of the year, we had taken a number of cost optimization actions, and that has really played as well in our favor. And finally, I think, from a market share perspective, we have done a lot of work to bring back our shares to the normative levels, which are in the early 50s. Finally, if I look at the whole year, we see a lot of prudence that we employed in terms of cash management paying off. And in fact, our free cash flow is in excess of 400 crores for the year, which is great. And apart from that, in this year, there's been a lot of learnings on how we can not just keep our employees safe, but actually succeed and produce and supply the markets in a COVID-safe way, right? So whether it is reconfiguring our plants to be completely safe from a social distancing way of working, whether it is changing and bringing a number of automation efforts and so on and so forth. So I think there's been a lot of action. And in Q4, we did see the momentum of all of these actions showing up finally.
Okay, so Rishi, if I were also just to get some numbers from you in terms of the sales loss, let's say from the end of March to now, can you give us a sense of how this is reflected in financials, particularly given that we finally started to see that recovery set in even on numbers after so many quarters of degrowth? And also, given the kind of season that we're now heading into, and the summer contributes almost 35 to 40% of your EBITDA, this is going to be the second year now with a spate of lockdowns that you're going to be staring at. Are you better off in terms of preparation or risk mitigation this year vis-a-vis what we saw last year?
Okay, so there are two parts to your question. So let me first talk about the momentum. So what we saw progressively through the year was an acceleration in the rate of decline and sort of, making sure that we recover very fast, right? Now, if I look at March specifically, which was the last month of the previous year, we saw all markets in the country, barring, a couple of states, recover to 2019 levels. So I think that is a significant, milestone for us, because it clearly shows that the consumption, the consumer preference, our shares are all intact. And it's really, the short-term impact of COVID, which has really distorted things. Now, the states that we did not see the recovery coming back in full, we know the reasons, right? So, for example, in Telangana, the COVID cess has not been rolled back, and therefore prices continue to be quite high for consumers. And we believe that, as we work with the governments and as we try to, reverse some of those things, that recovery will come back as well. Now, if I come to the second part of your question, which is really all about how do we feel about, the current season? The early part of April saw the continuation of the momentum that we saw in March. Having said that, of course, we then saw the onset of the second wave of COVID quite dramatically, and the resultant lockdowns and all the different actions that are being taken across markets. And that's certainly going to have an impact. In terms of our preparation, I do believe that there have been a number of valuable lessons learned last year. How do we be more agile in managing our inventories? How do we ensure that we can, service some states which have lockdowns from other states that don't have them? and so on and so forth. So optimally using our capacities in a way to service the market for maximum impact. We've learned where the pressure points were the last time around, both in terms of cash management, cost optimization, inventory, sales efforts, how can we leverage the online channel better, and so on and so forth. So there's been a number of different learnings, and we are deploying all of that. But I would say the underlying message in the context of the second wave is that we have to be watchful. We need to sort of be agile to see how the situation emerges and then really respond to that.
Okay, agility being the key there. Well, on the plus side, states have also widely rolled back taxes, rolled back other restrictions as well. To what extent has that helped things?
There is certainly a positive impact with all the different states taking a pragmatic approach, both in terms of ensuring that the outlets are open for sale, taxes are rolled back. In certain states, opening up of the online channel, recognizing that that is a legitimate and desirable way for consumers to engage with the category. So I think a number of these actions have actually had a positive impact. And I go back to saying, it's really the triple whammy that we had at the beginning of last year, the combination of lockdown, closure of the bars, and the high taxation that impacted us, disproportionately. And as those have eased, the business has certainly responded. In that context, it was very important, therefore, for us to both keep an eye on our shares as well as consumer preference, right? And as I said before, we are quite pleased to see that our shares recovered to normative levels, and as well as the fact that when consumers had a chance to consume the products and categories of their choice, they did return to, consumption of beer.
Yeah, Rishi, hi there. Good morning. Wanted to also understand what the outlook is with respect to the beer category, because I understand that that's been more severely hit as compared to spirits in the first half of FY21. What do you believe was the reason for that, and how has UBL recovered those lost sales over the last few months?
Yeah. So let me start with the last part of your question. So as I said in March, when we look at markets that were open, where taxes were rolled back, broadly, most of the country, barring a couple of states, we were back to 2019 levels. So that in itself is extremely encouraging and shows that category preference is intact. Now, if I look at it from the context of what I believe is the long-term potential of this category, it continues to be very, very high and strong, right? And the reason for that is it's a hot country. The median age of the population is, less than 30 years old. The category penetration is low, even when we compare it to markets in Southeast Asia, which don't have the kind of long beer drinking culture like, let's say, Europe or other parts of the world. So very clearly, rising prosperity and low penetration will continue to grow the category. If I look at the short term, I think it's going to be, impacted because of COVID. And that's something we need to watch. We need to be agile, and we need to sort of manage that, right? And I think that is really the focus of the company in the short term. So I think there's a long term and medium term, which is completely strong, with short-term headwinds that we will deal with and manage through like we have in the last 12 to 15 months.
Your margins have perked up quite well. The barley costs have been quite low, so that's fairly supportive for your overall margin picture. But how much of a threat is it when it comes to other commodities like glass, etc., to your margins? Can you give us a flavor as to what the trajectory is on your operational front going forward?
Yeah, I think, there are two things that I'd like to say. One, in the last year, the commodity situation was largely benign and gave us the opportunity not just to manage our costs, but also to take certain strategic views on some of the commodities where we needed to. Now, as I look forward, you're absolutely right. The barley crop is smaller, so therefore there's a headwind there in barley. There's a headwind there with kraft paper, and therefore, some of the cartons in which we ship our products. And of course, the metals exchange and aluminum prices are also fairly bullish, right? So I think those are the kind of headwinds, but we do believe that we have ongoing cost optimization programs that will help us to mitigate to a large extent some of these headwinds. And I think these are fairly normal that, we encounter in the course of a normal business cycle. So I think, we do believe that we have the programs in place to manage and mitigate them to some extent. And that will be our focus. That's an area for us to watch out on. So definitely the benign situation that we had last year is sort of changing.
Sure. Rishi, you had rolled out the beer at home campaign as well, but building an online channel for that is key. States had announced it, but there hasn't been anything concrete which really, managed to build itself. What's the status right now, and how is it that you plan to build up on home consumption via digital channels?
As I said, category penetration is definitely one of the strategic initiatives for us as the market leader, right? And Beer at Home is a campaign that we started last year with a strategic objective of driving an occasion that is not normally associated with beer consumption in India at this stage. We believe it's a long-term play. We believe it's something that, we need to continue doing, and it will yield results in the fullness of time. So that's something that we will continue to drive. Coming to online, unfortunately, online in India has been used largely tactically and allowed when, physical access to outlets was not that much available, and then restricted when, normalcy came back. But we do believe that it is a consumer trend to buy more and more product categories online. And it's a matter of time before policy starts reflecting in India that same reality. We've seen some markets like West Bengal where there is some degree of online that has continued. And our focus there is to, try and drive shares and ensure that our shares in that channel are better than our shares in the offline channel, because that's an emerging category. We've also seen now in Maharashtra there, with all the lockdowns happening there, some degree of, home delivery being allowed. And that's, again, an area of focus for us. So wherever it is available, wherever it is viable for us to do, we would like to lead the channel. But as I said before, there's not really a uniform policy across the country or a strategic approach that we have seen so far from the state governments. Having said that, in the last 1 year, my learning has been that they are a lot more open and, to experimentation, to coming up with optimized, with benign policies. So I'm hopeful that, this is another area where we will make a breakthrough with at least some state governments in the quarters to come.
Sure. In addition to that, while your market share is pretty firm so far, there are competitive threats as well, especially in the premium and above premium segment too. Are you confident of the brand actually seeing, or rather being able to up the share in that segment, the premium and the above premium segment, that is?
Yeah, I think, beer as a category is a category penetration exercise, and definitely that is the one of the focuses that we need to have. Having said that, we welcome competition, because as more and more players come in and create, new launches, new consumer mixes, it's going to create excitement in the category and, grow the category. We are very focused on the segment that you just mentioned, right? And just to make a case in point, we launched, ultra wit beer before the pandemic in some markets. And we are very pleased to see that in the markets where there's been at least 2 or 3 quarters where that product has been there, we are actually seeing category leadership for that particular category for ultra wit beer. That gives us a strength and confidence that, as we see more consumer propositions emerging, we either will be the first, or we could definitely be the second, but we could rest our market leadership based on the strength of our mixes. So we're very confident that, Kingfisher as a brand and UB as a company has both the aspiration as well as the marketing and operational and sales rigor to wrest leadership in all segments of the market.
Appreciate your time, Rishi. Thanks so much for sharing with us the outlook on your earnings, the volumes, as well as some of the challenges that the company is facing.